Hey there, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned in to Next Level Charting. Thank you very much for joining us. I appreciate it. If you're watching this video on YouTube, and you like it, of course, please give us a thumbs up and consider subscribing. So today we're going to cover a bull flag and bullish seasonal patterns for bonds. We'll look at a bear pennant in the oil and gas exploration and production ETF. And we've got a failure for the Copper Miners breakout, and the Steel ETF is testing its breakout zone. So I want to start off with TLT because there's an interesting dynamic possibly at work here, the traditional inverse correlation between treasury bonds and stocks. You know, treasury bonds are the classic risk-off asset. They are the safe haven. That's where traders and investors go when they flee riskier assets like stocks. We're not seeing that right now. Stocks, S&P 500, still in an uptrend. Small caps are lagging seriously, so they're not even part of the equation. You know, if you're looking for bullish setups and stuff, look outside of small caps. But large caps are still in an uptrend. But I'm watching TLT because there's a bullish setup, and there's also a seasonal pattern at work that could lead to a breakout in TLT. So first of all, on the indicators, I've got Stoke Close and I've got the momentum composite here. And those are part of the Trend Investor Pro Indicator Edge plugin. If you go to the lower right, you'll see that plugin icon. And if you look at this, you'll see all the plugins available, and just click any of those links to find out more about those plugins. So Stoke Close is basically the stochastic oscillator based on closing prices. And I'm using 125 days, which covers around 6 months, because I think that's kind of the sweet spot for trends as far as I'm concerned. I'm looking for a trend that emerges within a 3 to 6 month window, and that 125-day Stoke Close covers it. So I take the stochastic oscillator based on closing prices, I smooth it with a 5-day moving average. And you can see here, it turned red there in October. That's a bearish signal below 40. It stayed red, and then it turned bullish there in July with a move above 60. So it's currently bullish until it moves below 40 there. So that is talking about an uptrend there. And if you look on the price chart here, you can see that there's the 200-day moving average. There's the 50. They're coming together. So the 50-day is about to cross above the 200-day. You can also see that price is just above the 200-day. So we had this big move up, and we kind of got to pull back to the 200-day. And this is really a make or break point. Either we come back down and we fail and we test these lows, or we get a flag breakout. And the reason I see a flag is basically you had a pretty sharp advance here in TLT. So we get this sharp advance, and you're entitled to a correction after a sharp advance like that. And you can see it's zigzagging lower. It has the appearance of a flag. So you surge. A flag is a bullish continuation pattern. It represents a rest within that bigger uptrend. So you need to digest these gains. And if we get a breakout at 150, that's going to be bullish for TLT and argue for money moving into treasury bonds. And that could be negative for stocks, as treasury bonds are safe havens. Also, I see a bullish seasonal pattern for treasury bonds. And to show you that, I'm going to use the 10-year treasury yield. And the reason I'm using the 10-year treasury yield is because it's not affected by dividends, and it is inversely correlated to, well, inversely, it's the exact inverse of TLT. So you can see TLT rose from March until July, and that's when this 10-year treasury yield fell. And then we maybe have a bear flag in the 10-year treasury yield. So let's look at that seasonality chart. All right, so now I'm on the charts and tools page here at StockCharts, and in the middle you'll see a section for seasonality, and I'm going to look at the seasonal pattern for the 10-year treasury yield. So I'm just going to type that in the symbol box, and then I'm going to scroll down and I'm going to open up that window a little bit so it can fit into this video page. So now we have the seasonal pattern for for the 10-year Treasury yield. And if we stretch that out to 20 years, we can see when yields tend to rise and when yields tend to fall based on these patterns, these historical patterns. And look at which month is the weakest month for Treasury yields, when Treasury yields tend to fall. And that means bond yields tend to rise. 25% of the time, Treasury bond yields are up, which means 75% of the time they are down. So if Treasury yields are down 75% of the time, then that means Treasury bonds are up 75% of the time in August. So that means TLT has a bullish seasonal pattern here in August. And so if we get a flag breakout, you got that seasonal tailwind behind it, and that would be a bullish signal for TLT. So since I'm on this seasonal chart here, I just put up the S&P 500, and this is over the last 20 years, 2002 until 2021. And you can see we've been in a bull market for most of this period, since 2009. And if you look at the seasonal patterns, August is up 63% of the time. The average gain is 0.2, so not a big average gain. September up 58% of the time, and the average gain is an actual loss, 0.4%. So September is one of the weaker months for the S&P 500. And then this goes to 2002, so I'm going to move this slider over, and then I'm going to close this. So we go to 2002. So if you look up here at the top, you can see 2002. And then if we look at the seasonal patterns, up until 2002, you can see that July, August, and September were the three weakest months in the stock market. So if you go back 30 years, then July, August, and September are relatively weak months for the stock market. Now, we've yet to see a breakdown in the S&P 500, but I'm probably more interested in that seasonal pattern for bonds because there's a bull flag taking shape. There's a bullish seasonal pattern for TLT, a bearish seasonal pattern for the 10-year yield. So if we get a breakout with that flag, with the bullish seasonal pattern at work in the bond market, that could give some legs to that bond breakout. So I'll be watching that. And if bonds break out, that could mean that stocks are ripe for a correction. So I'm on the main analysis page here at trendinvestorpro.com. If you go to the home page and just click on analysis, there's a combination of free and subscriber-based articles. There you can see the free articles have free and the subscriber-based articles have premium. And on Monday, I was talking about junk bond spreads because they were starting to widen a little bit, and small and mid caps are underperforming. And this is very important when you're looking at a stock or an ETF. You can take one look at the chart. Well, first of all, you know what the SPY chart looks like, or you at least should, without even looking at it. You know that it's just been working its way higher since that early November surge, and it continues to bounce off its 50-day and hit new highs. So anything that is not mimicking that one, you want to just move aside and not even look at it. And so that would include small caps. That would include energy. The energy ETFs, they got clobbered, and then they stalled, and they didn't bounce with the rest of the market over the last few weeks. And we'll look at XOP coming up here because that was one of the ones that failed. But also at trendinvestorpro.com, I do a weekend video. And on Thursdays, I do a big ETF report where I cover the major trends out there, the current setups and the current breakouts in play. We've got a lot of breakouts working in some of the old economy ETFs, those related to finance, materials, and industrials. So here is XOP, and I've got the Stoke Close indicator, and there you can see it turning bullish in early December and then bearish here in early August. So it has broken down and reversed its uptrend. It's testing the 200-day, but when I look at this chart, you can see it came down hard and then consolidated. Now, we did have this island reversal right here. We have a gap down and a gap up, and I pointed that out in XLE in a commentary there in late July, but we didn't get any follow through. So you had industrials and material stocks moving higher during this period, but XLE did not. Sorry, XOP. It just consolidated. And that consolidation looks like a pennant. after a sharp decline. So you've got this pennant here, and there is the sharp decline. So you came down hard, you consolidated and broke down. This looks like a bearish continuation setup, and we could see further weakness in XOP. And the bigger downtrend signal would appear to validate that. Now, personally, I'm not into short positions because the stock market has a bullish bias. It's much easier to make money on the upside. It's much easier to lose money trying to short the market. Just look at what happened over the last year and a half or so. But this is just one stock or ETF group that I would avoid is energy right now. Now, last week I covered the copper miners because they had a falling wedge and a breakout, but it has not succeeded. There is the falling wedge, and I did override my Stoke Close signal because Stoke Close did turn bearish there in July. But I viewed this falling wedge as a correction within a bigger uptrend, and there was the breakout. But you can see the breakout didn't hold, and we had a really a failure there because we had a pullback, a little bit of a bounce there, and that bounce didn't hold and moved back below that low there. So this breakout in copper has failed, and that just goes, you can't win them all. This is just an example of a failed trade. It's important when you put on a trade that you have a level where you say, okay, I'm wrong, get out, move on to the next trade. And I also want to show an indicator that I use that is part of the plugin, and that is the ATR trailing stop. So if I'll scroll down here, there is the ATR trailing stop. And so this is where we get the breakout in copper. We got above that wedge line right there. And so I put on the ATR trailing stop at that point. And what that is it's two ATR values below the highest close since the starting date, which is on that trend line break. So if I put this wedge line back on, so there you can see we get that wedge breakout there, and we're holding above it, but then failure. We move below the ATR trailing stop, so that tells me that I was wrong on that trade, and it's time to move on. Now, another one I want to show you is XME, because it is another one, or SLX actually, the Steel ETF. That is another one that was highlighted. I've got the ATR trailing stop on there, but you don't always need the ATR trailing stop when you have a clear level to watch. So I'm going to go ahead and remove it, go over and just put on that little trash can there and close it. So we've got a similar pattern, and I'll go ahead and open this up here so we can see some details on that pattern. So we have a pullback in the form of a falling channel type pattern. It's a bit long to be considered a flag, but you can see you surge to a new high, you pull back, and you get the breakout. And we've got a broken resistance level that is turning into support. And so that's the breakout level that is holding right now. So we've got a throwback, a bounce, but we got another throwback. So usually you should continue higher after that first bounce, but now we're testing again. And if we close below this low, that's going to negate that breakout that I identified, and it'll be back to the drawing board for steel. So if you'd like to know more about trendinvestorpro.com, you can click on the link below in the description. Again, if you like this video, please give us a thumbs up and consider subscribing to StockCharts. Thanks again for tuning in. Have a great day, and I'll talk to you again next week.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.